big swings coming out of the market today. You had that Trump dump route quarter till 3 today. Did that huge pullback, bounced off the 580s though. So we did a little bit of adjustments here on our daily chart in our spider. So we have this large channel here that we were consolidating in, and we were identifying patterns in here of what could happen. In late January into early February, we hit these highs in here of 612. And then ever since this pullback on 221, let's just go out and see what's the high low of all these days. So in here, you have about $11 move. That's the difference between your highs and your lows in there. So kind of like our spread we're kind of looking at here. It's going to be $7. Here it's 8. You got another $8 there. You have 12, let's see, 14 there. Last trading session, you have 12. And then today, obviously, about an $18 move off of the highs that it hit compared to the lows. So big swings in here, big consolidation. And what we did is we adjusted because we were always kind of worried about that 585, 586. Well, it looks like now that that immediate resistance is going to be that 588, 589. And that's going to be because if we go in here to this 30-minute chart, you can see the past few trading sessions right here. So last Friday's 589, 588s. In here today, you had these 588s, 589s, a lot of jumble right here, right on this trading session today. So if we go back to our daily chart, what we did is we adjusted our trend line here, if I can get this right. And that's going to we took the lows in October here, so beginning of October and then the end of October, and we took the low with our January, and then we kind of made a trend line and extended it from there. And as you can see, it actually matches up perfectly where we were today. And that's going to be right around that 580 mark of that low in here off of today's trading session. So going forward, 580 is going to be our mark, and our resistance up here is going to be that 595, 596. But in between, we're going to be watching that 588, 589 range, and then we're going to see if we can start pushing up into that 596 and the 595 areas. So we're kind of looking at these big swings here with all the volatility, obviously just pumping through the market right now. Every time Trump speaks, it seems like something moves the market in the opposite way of where bulls would like it to go. So that's going to be something that we need to be aware of as we're trading, right? You can have the best technical setup, but it's only set up until it doesn't work, right? So it only works until it doesn't work. News kind of just says, we don't care about your TA, and then you have to start from scratch again. So that's where we are. That's why we adjusted this. So 580s we're going to be looking at as our major support, and then our first resistance is going to be that 80, 588, 89. Above that, we're going to be looking at the 595, 596, and that's kind of where the 9-day EMA is. It's sitting at 594, but more or less it's right up there as well. RSI is still down here in oversold territory, but we were oversold a week ago. So that doesn't really mean a whole lot, especially when this is just kind of being reactionary and news based, right? So just waiting for Trump to say the wrong thing about Ukraine or Russia or tariffs or what have you. So just kind of news based, not really worrying about the RSI currently, but we're just kind of keeping it in the back of our mind. Now, we mentioned these big swings back in here from the 22nd into today. So where does that put us for tomorrow? Well, you have right around a $6 expected move priced in by tomorrow's expiration here in the SPYs. The following day, you got $8. And if you go all the way out to Friday, about $11 expected move. You go to March monthlies, right around a $20 expected move. So huge volumes in here, obviously, because of all the moves. If you look at all the puts and the calls and how much was traded in premium, or how many contracts just were traded today in the zero DTE expirations, you're over 200,000 basically on up and down on each side, right? The puts and the calls. So we're going to be it's going to be really volatile in here, and we might be trading in this $15 channel for the time being, but you never know, we might get a nice little news bounce in here and then kind of go up above it and then stay within this channel here, the 596 to the 609s, or we might just be kind of respecting this lower trend line here, consolidating, taking a little breather before we start working our way back up. We kind of all have to wait and see, but again, big expected move by tomorrow's expiration, and it would not be surprising to hit this resistance, but it also would not be surprising to kind of go down and visit these 575s once again, just like we did back here in January. All right, guys, if you like this video, make sure to check us out on all of our social media. We also have a Discord service if you're interested, and you can find all of our socials in the description below.